So the first story we're going to get into is Michael Burry's latest biggest bet that he's just done on the AI craze that we've been seeing at the moment. So it says here, Michael Burry reveals Nvidia and Palantir puts after bubble warning. And I've done many videos on this already on the AI bubble, but we're going to dive a bit deeper on why he is doing this. Yeah, I can use it $5 to buy some more silver. Thanks for that, Dookie. So it says here, Michael Burry's Sycan Asset Management disclosed bearish wagers on Nvidia Corp. And Palantir Technologies Inc. just days after hedge fund manager posted a cryptic warning to retail investors about market exuberance. Now, he's done many warnings before, Michael Burry. He's done many shorts before, so we have to take this with a grain of salt. But this bet he is doing is one of the biggest bets he's done since 2008. And I'll make it a bit bigger here for you guys to see. So it says here, this is not Burry's first bearish wager against Nvidia. During the first quarter, Sycan disclosed that it had liquidated almost its entire listed equity portfolio and brought put options on the chip giant, as well as a handful of US listed Chinese tech giants. So we can see here, Burry took to social media last week with a cryptic post on X that included an image of his character from the Big Short movie and a warning that sometimes we see bubbles. Now, I do think the AI bubble does have a bit of room to run. I still think there is a lot of momentum, but we are now definitely in bubble territory. So we can go ahead and see here some charts he put out on X. I'll go ahead and move myself so you guys can see here. It says cloud segment year-on-year growth, average growth rates across 2 key periods. So, and as we can see here, the trend here, I'll go ahead and adjust this for you guys. We can see Amazon, Alphabet, and Microsoft. The growth is slowing. And the next chart here, which he posted, US tech CAPEX growth is matching the tech bubble of 1999 to 2000. I also had other charts where I went over that the market concentration of the largest 10 stocks is getting very, very close to what it was during the dot-com bubble. And this is something that's going viral at the moment. This really explains what's happening in the AI industry. It's all these big tech companies. They're giving them, $100 billion. Then you give me $100 billion back. And they're all just circle jerking each other, giving each other money to artificially inflate their revenue. And then they go to investors, look how much spending's happening in AI, look how much growth there is. It's because they're all giving each other money. There's a story, and I'm sure you guys have probably heard it, of 2 economists walking in the bush. And then one sees, a pile of poop. And he goes to one economist, I'll give you $100 if you eat that poop. He goes, yeah, for $100, I'll go ahead and do that. So he eats the poop. And then they keep walking down, and then he sees another piece of poop, and he goes to the economist, I'll actually give you $100 if you eat that poop. And the economist goes, oh, sure, won't turn down $100, $100. He eats the poop. But then he goes, wait a minute, we just basically ate, a piece of poop for nothing. And he goes, no, we increased GDP by $200. And that's basically how it works with GDP and revenue. It's a lot of these companies, giving people money, and then it artificially inflates GDP. Just like, for example, immigration. More and more people coming to the country and spending makes it look like the economy is doing better in dollar terms, but on an individual basis, GDP per capita or standard of living is actually going down. So we'll keep going here. So investors' concerns has risen for months as a wave of circular deals involving OpenAI, Nvidia, and other AI-focused firms spark concerns that the AI boom is being artificially propped up. Well, it's pretty plain to see that it is being propped up. And this is when Palantir came out, the CEO, and says, I like what he's doing, but I just don't like that he's shorting my company. So he says, I'm not against shorting as a matter of theory, but I'm just saying pick something that is not doing a noble task. He added that the idea that stocks like Palantir and Nvidia are the ones someone would short is crazy. So he's saying, look, go ahead, you can short anyone you want, but just not us. Now, shares in Palantir, which raised its annual revenue outlook Monday, this was on Monday, fell more than 10% as analysts pointed to the stock's soaring valuation. Nvidia shares were also lower, slipping as much as 2.9%. And this is what I always say, this is what happens before every huge technology, even like the railroads, when, surely the railroads did change the country, the way people get around the country, and it was great technology for the time, but we see rampant speculation and people just paying crazy amounts. It doesn't mean you pay 1,000 times a company's earnings just because it will be a disruptive technology. And that's what we're starting to get to the early stages of AI. Yes, it will change the way people work and live, just like the way the internet did, but it's too early and people will pay too much. And also, nobody knows who the real winner would be. Everyone thought Yahoo would be the winner of search, but then along came Google and disrupted the space. So Burry, who rose to fame for his 2008 bet against the US housing market, brought put options that profit from price declines on Nvidia and Palantir, according to 13F regulatory filings released on Monday. He also disclosed call options on Halliburton Co. and Pfizer Inc. the following show. I don't know if I'll be going all in on Pfizer, but that's just me. Now, we did get Palantir CEO come on CNBC, and he's definitely panicking and not happy with Michael Burry shorting. But before I play this clip, let's see what you guys are saying about this. Poop analogies are always impactful. Definitely true there, Matthew. TKS, eventually the entire consumer market is driven by feel-good, unrealized stock profits. Yeah. Team said, what noble task are they doing gathering data on us? That's right, you have to give them their data for the greater good. Is all the talk about extra SSA money from Trump real? If so, we are looking at collapse. How is this possible? Well, we'll dive a bit deeper. Nee says, no, I don't think he just wants the data. Yeah, the data or the data, however you want to say it. Tina says, lots of layoffs in Q4, but I wonder how 2026 job market will be with Trump's. Yeah, we'll get into that later in the stream. So let's watch this clip. Give my voice a bit of a break.
Above expectations in a big way.
And let me know how the audio is for this clip. If it's too loud or too low.
Company issued better than expected fourth quarter guidance. Shares down in the pre-market this morning. We'll talk about that as well. But joining us right now is somebody we've been talking about, frankly, all morning. Alex Karp is with us. Palantir CEO. Alex, it is so good to see you this morning.
Too soft? Okay.
We had your biographer.
That better?
On the broadcast.
Okay, there we go.
And we're speaking about you now in third person, but now we're doing it in first person.
So this is the company Michael Burry is shorting Palantir, for those that don't know.
The earnings were a blowout, I think, across the board. We can talk about maybe why the stock market is reacting the way it is. But, I was listening to the call yesterday, and I wanted to, just for those who didn't get an opportunity to hear it, I think you made some fascinating points about why you think this company and maybe even yourself are so misunderstood.
Well, there are lots of easy ways to misunderstand me. I misunderstand myself, and it's not like the super conventional playbook.
Is it good now?
Thing. Look, we're an anti-playbook
That's as high as I can get it.
company. If you want to do the personal version, I'm like this dyslexic, formerly and I believe currently still left of center, who actually sticks up for progressive values, which triggers TDS loving people, because I think the Democrats are no longer progressive. And then the company is built in a truly sui generis, unique way, which would only be possible in America, and actually explodes every assumption of how an expert would build a software business. The more you actually know about building software, the more odd, unique, and inexplicable our rise in success, and I would say domination on the enterprise software battlefield looks and is. And then I would say one of my main issues is Palantir, because we called a lot of things that are kind of establishment views that often are viewed as kind of being super woke into question in every single assumption of Palantir. The people who piled in.
Okay, I think that's enough words from the Palantir CEO. He's just saying a bunch of buzzwords, but you can see he's really panicking now that he knows that Michael Burry is shorting the stock. And yeah, I see that my desktop audio in the software was actually lower than on here on YouTube. So what do you guys think about that? Do you guys think Michael Burry is right in shorting Nvidia and Palantir at the moment? Let me know down below, and we'll get into our next story. So the next story, the big story that I want to share is what's happening in New York. We see the new mayor that's been elected. A lot of people are freaking out. A lot of people are panicking. A lot of the big banks are very, very worried because they're going to be taxed more. They're going to be regulated more. There's going to be more regulation and taxes on the financial markets. And this poses a big, big risk. I think we're going to see more layoffs happen in New York. And also New York is the financial capital of America. So it's something, if New York really goes down, we're going to feel it across the rest of the country. So I've got this video here on Texas governor is actually threatening 100% tariff on refugees fleeing New York. So let's go ahead and watch some of this clip here. Before I do that, so Gary says he's an idiot. I won't even touch AI right now. Forget a short. Yep. PJ, I'm just glad I do not live in New York City. Yes, definitely overhyped and too expensive. Gordon, he might be right, but timing is critical. If he's wrong, he could lose a lot of money. Definitely right. I don't ever short stocks because you can lose everything. It's definitely very, very risky. Everybody's shorting the big seven except the idiots that don't know no better. All right, let's go.
Flux of New Yorkers coming to their states, and the Texas governor, Greg Abbott, has threatened to slap a 100% tariff on any Mamdani refugees. He tweeted, "After the polls close tomorrow night, I will impose a 100% tariff on anyone moving to Texas from New York City." New York Post took this seriously. I'm sure he's joking.
So what do you guys think about that? Let me know in the chat.
But states like Texas and Florida are going to be the beneficiaries of this exodus out of New York.
Oh, for sure. I mean, there's just no doubt about that. We've discussed before, Rita, that in the US, the federal system is one of the great geniuses of it is that it makes it very easy to move around the US, different states, looking for work, looking for cheaper housing, looking for better standard or quality of living, looking for places with less crime and so on. It's very easy to do in the US in a way that it isn't in most other countries. When Governor Abbott said that, I mean, I take it with a pinch of salt, but there's a serious point, by the way, behind that, which is when there have been exoduses of people from, for instance, progressive states, liberal states like California in the past, you see a phenomenon that occurs in other countries too, but it's very stark in America, where people end up leaving a place.
Gary, ad break 5, YouTube, thanks YouTube. Yeah, YouTube's so worse, so bad. They're playing more and more ads, and the revenue they pay, I know this because I'm a creator, is like 50% less. So I don't know what the heck YouTube is doing. They're pumping more and more ads and actually paying their creators less and less.
Where the policies they have effectively voted for most of their lives come into effect, make their lives worse. And then some people who can flee to a place that has more conservative politics, but they bring their liberal politics with them. You can see that, and you can see that in Texas, where many people from California fled California. They go to places like Austin, Texas, and they keep voting Democrat. So it's I can understand Governor Abbott's slight wry comment there.
But I'm going to mainly focus on the financial impacts of this. What we're going to see is real estate in New York is already so overvalued. We've seen a lot of cracks in commercial real estate. I think that could be a big risk if more and more companies leave New York. And if we see, a lot of the wealth leave, a lot of the business leave, the problem with socialism is you always run out of someone else's money. It's great when you got lots of money, but when the money dries up, what do? You have to print more money and continue to devalue the money. So what you have to know is, people, the government's never going to make you rich. There's never going to be a government that'll come in there and say, look, we'll give you all guys $100,000. We'll buy you a home. It's always coming from someone else's money, and it's always going to devalue the money. So don't ever rely on the government. Always take wealth building into your own hands by creating some kind of business or trying to find a way to increase your income, either at your job or getting a better job, saving, paying off debt, and investing.
Oh, and plenty of Texans feel the same way. And you look at Austin with the influx of Californians.
Yeah, truth. It's always the working class that has to pay the taxes. That's right. These huge banks, mega corporations, they'll find a way to get around it. It's really the middle class that ends up footing the most of the bill.
New Yorkers, it's unlike the rest of Texas. You've got a lot of the same issues that you see in New York and San Francisco. But let's hear from a New York woman about what issues really matter to her and will determine how she votes. It gives you a clue into why Mamdani is doing so well.
Is it okay that our neighbors are getting taken off the streets by ICE? Is it okay that gender-affirming care is being taken from young people who really need it to survive? Is it okay that the Supreme Court has now justified racial profiling? That's not how I want to treat my neighbor.
Now, Douglas, some
What do you guys think about that? let me know in the chat.
may characterise that woman as an awful, that's an affluent white female leftist, and that is a powerful voting
That's funny, awful.
bloc. They're among Mamdani's most committed supporter base, and they can turn elections. You look at the demographics, you look at the voting patterns, and that bloc votes very left in a very consistent manner.
Yeah, in fact, of course, it's similar types of politics that are actually responsible for the government shutdown at the moment.
Team said, why didn't Inhaber get their citizenship? Yeah, that'd just be too hard, wouldn't it?
The Republican...
TKS, that's a nasty woman. Very nasty.
And the Democrats are at loggerheads on one issue in particular, which is whether or not illegal migrants into the US should be given health care. And that's the sort of position that many Democrats, frankly, have found themselves in, is supporting things which even 15, 20 years ago would have been absolutely disastrous policies for the left to push for. If you went back to the 1990s and had a very successful Democratic president like Bill Clinton, if he'd have said, yes, we should have open...
Are you guys getting an echo? I'll go ahead and mute my mic. It's probably from the mic. But also, Sterling says AI is in a phase where you get used to it and rely on it, and you get slower. Yeah, so, just like smartphones. They say smartphones are smart, but actually, if you use it, it makes you dumb because you rely on it more. People can't remember phone numbers. For example, Google Maps. I don't know if you know, but before Google Maps, you'd be able to go somewhere once or twice and you remember exactly how to get there. Where people relying so much on Google Maps, they go there 5-10 times in their brain that's normally used for navigation completely shut off. And if they don't have their Google Maps, they completely have no idea where they are or how to get around. So I'll mute my mic when I play this.
Borders, and anyone who breaks into the country should be given superior health care effectively to many Americans. People would have said, do you want to not get elected? But there has been this extraordinary shift on the left. It's true there's been a shift on the right as well, but there's been an extraordinary shift on the left in recent years. And just consider this, that look at the priorities of that woman. I mean, gender-affirming care, please, when it is to do with one of the world's great cities, perhaps the world's great city, staring into the face of democratic socialism, and you're saying, let's not talk about the economy, let's not talk about the illegal immigration, let's not talk about the crime, let's not talk about the homelessness, any of these things. Let's talk about gender-affirming care. Normally, that is the sort of thing that would...
What did Ronald Weasley say in Harry Potter? She needs to sort out her priorities, and I think that's what the people are really, need to do. They need to sort out their priorities. The biggest priority right now is having a better standard of living, being safe, less crime, being able to afford a home. That's really what people's priorities should be, having a sense of community. But, these people, they've got all their priorities backwards.
make a party and a candidate totally unelectable. Yet weirdly, we do have, as you mentioned, Rita, this strain of people for whom there is just never a cause too progressive that they don't want to die on the hill of it.
All right, so I think that's enough there. I've heard a fair bit of that, but I'll just give my own opinion on what's happening in New York. So we're going to see a lot of money go out of New York. This is going to affect the housing market there. Commercial real estate's already struggling in New York. And I think the big banks may see some big defaults if these companies really do flee. But again, this is all speculation. This happens every time there's an election. Time will tell if they actually do leave or not. So go ahead and see what you guys are saying there. New Politics, respect to you, Michael. Thank you. Alrighty. So let's go into JP Morgan discloses government probe into de-banking practices. So it says here, JP Morgan discloses government probe into de-banking practices. And let's dive a bit deeper into this article. So US regulators are examining whether JP Morgan Chase has denied customers fair access to banking as pressures grow over de-banking decisions that were made against conservative figures, according to a report from Financial Times and the company's 10Q filing. So this was something that happened, had been happening for the past 5 years. A lot of people said, look, it's just a conspiracy theory. It's not happening. And it's really important because, you know, it doesn't matter what side of the political spectrum you're on. If one day, you know, there's someone on the left that's in party, you're on the right and you disagree with them, they can debank you. The person on the left may say, well, I don't care because that's someone from the right getting debanked. Well, then if someone like Donald Trump from the right gets put in office and he uses that same power, well, then you will get debanked as well. So something that we should all stand up for, no matter what side of the political spectrum you're on. So it says, in its quarterly filing, the bank noted it was responding to requests from government authorities and other external parties regarding, among other things, the firm's policies and processes and the provisions of services to customers and potential customers. So what do you guys think about that? And Bakery, thanks for the super chat there. Alrighty. What do you guys think about this with JP Morgan debanking customers? All right, let's keep diving deeper into this article. So JP Morgan linked the scrutiny to an August executive order from Donald Trump directing regulators to review possible politicized or unlawful debanking. The bank said related inquiries included reviews, investigations, and legal proceedings without identifying the agencies involved. Now, Bank of America has similarly reported responding to government demands about fair access to banking. And industry lobbyists argue that regulatory rules around politically exposed persons and reputation risks have pushed banks to deny certain customers. So again, this is very, very dangerous no matter what side of the political spectrum you're on. A Kiwi Job says debanking should only be permitted in response to fraud or other illegal activity. That's right. It shouldn't matter what your political beliefs are. Now, it goes on to say, just yesterday, we noted that a top bank watchdog was making sure big banks have finally ditched the debanking policy. It happened around the same time during Google, PayPal, and Amazon all banned. This is zero hedge to what's going on with COVID and other issues in 2020. Those that missed it, a slew of banks under the Biden administration outright cancelled people's bank accounts and didn't allow them access to a bank account based on the industry they worked in or many times their political views. Now, this oversight follows the June executive order from President Trump directing banks to avoid denying services based on industry type or political considerations. And that's something we should all definitely strive to. Someone said, debank the banks. That's right, become your own central bank. Now let's go over to what's also happening with the government shutdown, how it's affecting the economy. And now apparently there's going to be 4,000 flights impacted. So let me know in the chat if any of you have had to, get on a flight, travel, and have been impacted by the shutdown.
Then I also want to talk about air traffic controllers, the shutdown, and our staffing issues and the mitigation efforts that we've been deploying to make sure we keep the airspace safe. So first off, with regard to the crash last night, the NTSB gave a press conference earlier. There are a lot of videos online, a lot of about air traffic controllers, the shutdown, and our staffing issues and the mitigation efforts that we've been deploying to make sure we keep the airspace safe. So first off, with regard to the crash last night, the NTSB gave a press conference earlier. There are a lot of videos online. A lot of theories have been deployed online based on what folks have seen. We are not in the business of theories. We don't speculate. We are going to wait for the facts to come out, and with those facts, we will present them to the American people as well as with the NTSB. I'd also note the FAA has a ground team in conjunction with the NTSB, both of them are doing great work to get to the facts of what happened. I do want to extend my condolences to the families of those who lost loved ones in the crash. I did have an opportunity to speak with the union head of the UPS pilots, extended my condolences as well. He indicated that he was very good friends with the pilots on that aircraft. So condolences to the families. This issue, though, of the aircraft is very different than the second issue, which is air traffic controllers, which, by the way, this was not an air traffic.
And this has been a big issue for a long time. They've been, not funding the air traffic controllers. They've been lowering the standards for who can become an air traffic controller. And it's not just happening in the US. We're seeing a lot more incidents happen at the airports than we've had pre-2020, especially when a lot of people were fired during 2020 and they restructured to get cheaper labor.
Traffic control issue. It appears that it was a mechanical issue. Everyone's been clear on that. That is not speculation. Two very separate issues at play. In regard to air traffic control, we've had a conversation over the course of the last month about some of the challenges that we're having in the airspace. Many of you know that we are 2,000 controllers short, air traffic controllers short, and we have surged our academy to bring more controllers into our system. We are 20% up in controllers through the academy thus far this year. I've also offered air traffic controllers who are of the age of retirement a 20% upfront cash bonus to actually stay on. Some of the best controllers we have don't retire, keep working for us. All of that has been reducing the pressure on the staffing side of air traffic control. It's working, but it takes years to bring more well-trained certified controllers into the airspace. The shutdown is having an impact on our ability to maintain those numbers and dent that 2,000 shortage that we have. You also know we're modernizing the airspace. We have an old set of equipment that we use to control America's airspace. We have, though, the safest airspace in the world. And that's not because of the equipment, that's because of the well-trained air traffic controllers that we have operating the national airspace. We received $12.5 billion from the Congress in one big, beautiful bill, and we need a total of $31.5 billion to accomplish the mission of completely rebuilding America's airspace. The work has begun. We're transitioning our telecommunications. We're about to announce a project manager to do all of the work for this brand new system. But I want to talk about what's happening over the course of the last month with regard to the shutdown. Our air traffic control.
Okay, yeah, this is really what we want to see. What's the impact going to be for these flights and for the economy? So everyone's saying the sound is doing a bit better? Yep. Okay, beautiful.
And a lot of those who work at DOT, but throughout government, they haven't received paychecks. And many of these employees, they're the head of household. They have their spouse at home. They have a child or two or three. And when they lose income, they are confronted with real-world difficulties in how they pay their bills. And so for air traffic controllers, they received a partial payment in early October. The second payment, they got a big fat zero, no paycheck at all. Tomorrow, they get a pay stub email on what their next paycheck is going to be. And when that pay stub comes out, that is also going to be zero. So they will have gone a month without any pay.
I think this is going to have a huge impact on the economy for Q4, but we're not going to get that data until early 2026. So it's something we definitely have to pay attention to.
And what we're finding is that our air traffic controllers, because of the financial pressures at home, are taking side jobs. They need to put food on the table, gas in the car, pay their bills. By the way, I do not want them to take side jobs. I want them to show up for work. We have asked them to show up for work, but I'm not naive to understand that they're trying to figure out how they meet their daily obligations. And so because of that, we have seen staffing pressures throughout our airspace. Those who travel will see that we've had more delays. We've had more cancellations. We do not want to see disruptions at the FAA or here at DOT.
Team says it's unrealistic to expect people to show up for nothing. Yeah, well, that's definitely a hard ask, but also then, you know, the country still needs to keep on moving. If people don't show up, well, then we're going to have big issues. But I definitely feel their pain, or I can definitely see their pain.
We don't want that. But our number one priority is to make sure when you travel safely. And that's why, as the administrator and I have been talking throughout the day, his team has been working for the last 24, 36, 48 hours crunching data. We're noticing that there's additional pressure that's building in the system. And again, our priority is to make sure that you're safe. And so we're going to talk about additional.
Hey, Mr. Bravo's in the chat. Made you smile. Yeah, thank you. You always make me smile, Jay Bravo. Hope you're doing well, brother. Thanks for checking in. Everybody cue the fire.
Additional measures that we are going to take that's going to reduce the risk profile in the national airspace. And I'm going to turn it over to the administrator to do that. As he walks through what that plan is going to look like, I anticipate there will be additional disruptions. There will be frustration. We are working with the airlines. They're going to work with passengers. But in the end, our sole role is to make sure that we keep this airspace as safe as possible. The administrator is going to talk about all of the tools we're going to deploy. One of them, though, is going to be that there is going to be a 10% reduction in capacity at 40 of our locations. The administrator is going to tell you that this is data-based. This is not based on what airline travels, has more flights out of what location. This is about where is the pressure and how do we alleviate the pressure. And so I want to thank him for, again, him and his team's great work.
Hey. Alrighty, so yes, as we can see, there's massive disruptions to flights. I hope Mr. Bravo hasn't been affected by this, but the whole country will be affected by this. And again, this is going to have severe economic consequences. Also, we're seeing there's still a lot of fighting going on in the Supreme Court with what's going to happen with SNAP payments. A lot of people aren't going to have money to buy food. There is also a lot of fraud where people have been receiving these benefits that shouldn't have got them at all. So that's definitely going to be good, because then there'll be more money that would be able to be given to those that actually do need it. And this is going to have massive effects on the airlines, massive effects on the big retailers, and it's simply just going to take us a while. So I'm not saying that, you know, we're going to have the data tomorrow and then everything's going to collapse tomorrow, but this is a huge risk to the economy that we're going to see in Q1 in 2026. So where am I from? From Australia, mate. Good old Australia. Now, this takes us into our next topic, which is we're going to see much more of this early 2026, is corporate layoffs are spiking as companies prepare for tariff shocks. But we don't just have, you know, tariffs. We've got tariffs that has in fact impacted them. Now I've got the government shut down, and we've got AI and automation accelerating. So it is very, very bad news. So let's go ahead and look at this. So corporate layoffs spike as companies prepare for tariff shocks. So let's dive into this report. So at the beginning of the year, layoffs accelerated with thousands of DI program employees, whatever the political stuff there, are thrown to the curb. But the streamlining isn't stopping there. The cuts are not stopping despite solid growth in overall sales volume, amount of goods in the US. This might seem counterintuitive unless the layoffs are in preparation for a perceived incoming downturn. And I think that's what we all see. It's pretty obvious. The primary factors influencing job cuts are, of course, tariff uncertainty and inflation. That's definitely right. Central banks are saying inflation is going down. They've won the fight on inflation, when we all know the cost of living is, still going up massively, and it's not getting better, it's still getting worse. So this is a list of companies that have been announcing layoffs, and I'll adjust it here so you guys can see it a bit easier. So Target announced 1,000 layoffs and 800 positions eliminated, and it's focused on its global corporate workforce. Now, white-collar jobs or white-collar cuts are global and are more likely related to tariff uncertainty and to inflation. But Target's not alone. Nestle has announced 16,000 layoffs over the next 2 years, with 12,000 coming from its white-collar workforce. So what I'm noticing, the trend here is a lot of these jobs a lot of the AI jobs they're taking are all jobs that are done at a computer. Because if your job's done at a computer, it is a lot easier for AI to replace you than manual labor jobs that robotics have not been able to solve just yet. Now, UPS cut over 12,000 white-collar jobs in 2024, and in July they began shuttering 73 sites and eliminating 20,000 blue-collar positions. The most recent layoffs are efficiency-related in expectations of plunging global shipments due to tariffs, as well as the loss of 50% of Amazon's volume. So this is absolutely massive, everyone. And what do you guys think of this? Let me know in the chat below. So Rivian has eliminated 600 corporate jobs as electric vehicles suffer another year of decreasing consumer interest. And Nike is instituting 2,000 white-collar layoffs in a restructuring bid. And Nike is in fact suffering from revenue losses plunging 9.8% year over year, and their business model relies heavily on China, which is 24% of their manufacturing, which is a primary target of Trump's tariffs. And there's still a lot of back and forth with the tariffs between the US and China. They have come to, kind of a stalemate at the moment, but I'm sure it's just a matter of time before more tariffs are announced. So I'll go ahead and read some of your chats here. Target looting budget is zero. Yep. How can you repeat that, please? I was too busy watching ads. Now again, Gary, YouTube is actually, you think I'm making lots of money? No, it's YouTube that's putting more and more ads. And compared to, what YouTubers were getting paid in 2020, it's down like 70%. So YouTube's probably pocketing most of the money because their ad business isn't doing well either. So Starbucks is dropping 900 corporate employees this month, following 1,100 cuts in February. And the chip company, Applied Materials, is laying off 1,400 white-collar workers. Morgan Stanley is cutting 2,400 employees. Cable Giant, 1,200 management jobs. And GM is downsizing approximately 3,500 workers total in 2025, citing slowing EV sales and tariff headwinds. Now, Amazon, as we've covered recently on the channel, plans to cut 30,000 corporate jobs, which represents nearly 10% of the company's roughly 350,000 corporate employees, as the company works to pare expenses and compensate for overhiring during the peak pandemic demand. So I'll be starting to see things are piling up, but again, that takes a while for us to get the data. Now, from a cost perspective, HQ employees are far more of a burden on the company's bottom line. And Target, for example, stands to save up to $171 million on employees, salaries, and benefits in a single year by removing 1,800 positions. So that's big cuts for them. And again, one person's income is another person's spending. So these people that will be losing their job, well, they're not going to spend at other businesses. And this is a big thing with AI. If AI really is going to take everyone's job, which I don't think is going to happen anytime soon, but we will see, we are seeing some disruptions. Well, if nobody has a job and it's not earning income, well, then these businesses won't have customers. So there's going to be a very interesting balancing act that's going to come head to head, and it's going to be very interesting how it plays out. Now, however, this is only a portion of the 846 million the company has lost in sales from 2024 to 2025, meaning more target layoffs are probably coming soon. So it says here that other impacts is inflation. So this has slowed dramatically since the Biden administration, but prices remain high on most necessity items, including food, energy, and housing, because if prices get too high on, consumer or discretionary items like the latest iPhone or the latest TV or, luxury clothing, people can cut back their spending on that. But you can cut back your spending on food, but you can only cut back so much, same as energy and housing. Everybody needs a house. Everybody needs energy. Now, it's still taking a long time to, they say here, be fair to Trump, it takes a while to stop inflation, but it doesn't matter who's in office at the moment. Both sides are spending like crazy. Now, a deflationary event is needed to bring prices down, or a massive production increase to create oversupply, and high interest rates have not produced the proper drag on demand. That's right, people are still taking on debt like crazy, which I'll get into in a moment. In fact, Americans are spending more than ever and taking on more debt than ever, and this is a bad thing if we're talking about finally reducing prices on goods and services. As for tariffs, a tax on corporate outsourcing is a good thing and long overdue. The problem is that the positive effects are slow. Manufacturing is being shifted from other countries back to the US, but not at a scale that's going to revitalize the middle class in the near term. In other words, the public should expect multiple years of economics pain to produce significant gains, and anyone who believes there's an easy way out of stagflation is living in fantasyland. And that's exactly right. What used to normally happen when things got overvalued, when there was a bubble, when there was huge imbalances in the market, there would be a recession and they'd correct things. But what's happened is now governments, they don't want a recession because they want to get voted in again, and they don't want a recession on their watch. So every single time we even get close to a recession or close to a market crash, they immediately bail out the economy. They print heaps of money. They give their social checks to these big corporations, and then the markets don't crash. And then people think, oh, capitalism's the reason why we have so much problems. Well, no, it's socialism for these mega corporations. And the reason why inequality is getting so bad is because we're not letting what used to happen, corrections and recessions happen, that re-stabilize and rebalance the markets. They just want this endless boom that is only making a very few rich and many people very, very poor. So it says here, a number of companies are clearly coming to this realization and reducing costs and jobs to protect themselves from future pitfalls. And we'll get into a clip from CNBC in a moment on the impacts that's going to happen with these tariffs. But I'll go ahead and read the chat here to see what you guys think about this. So it says here, Michael, use Greater Depression to increase your wealth. Well, those that buy at the bottom, if there is a recession, will do very, very well. But you actually have to have money, because in a depression, a lot of people lose their jobs. They may default in their home loan, and they may have nothing. So you definitely don't want to be one of those people. So Gordon says tariffs were supposed to help out with budget deficit, but it looks like the Supreme Court is going to make them go through Congress. So they'll probably be reversed. You'll have to wait and see what that happens. But we all know once the government gets a bit more money, they'll just spend it. It would take years to rebuild the industrial base. That's exactly right. And things would be much, much more expensive. So it's not a easy fix with what they've done with globalizing the manufacturing industry. Money printer go brr, that's right. Yeah, someone said they just watched a crypto stablecoin commercial, you'll pass. Yeah, that's right. Alrighty. Well, let's get into this next clip here. Supreme Court to hear a challenge to Trump administration tariff policy, which we're just talking about. Let's go ahead and play this here.
To President Trump's tariff policy. And Eamon Javers, you can also look at this on Polymarket. Joins us now with more on the case. I think only 35% chance of the president prevailing with this tariff case. I don't know whether that's accurate or not. But money. Yesterday we saw it, Eamon. There were people betting $2 million on Mamdani to make $100,000. No, it wasn't, though. Was it?
Really? It's not if it's a sure thing, but that is
it was a sure thing.
That's a huge risk to take for a
right.
relatively small.
But that shows why, Eamon, instead of polls, if you plunk down a couple $1 million, you probably have a pretty good idea what's gonna happen. Yeah. Now I'm thinking I believe
I saw, Joe, yesterday?
Yeah.
I saw people online, somebody tweeted this at me, people online are betting during the White House press briefing on the next word that Caroline Leavitt will say.
Yeah, I was seeing this. This is getting crazy, the betting markets. People are just betting on absolutely everything these days. It shows, that the speculation is getting crazy. People obviously betting on the markets, but the leverage now is getting crazy. I saw, some big YouTube crypto influencers doing 7 to 10x leverage on Bitcoin and getting liquidated, getting wiped out. It's absolutely insane. You should never do this, people.
And one guy had bet $700 that the next word was going to be China, and I asked her a question about China, and he was like celebrating online and tweeting it out and screaming. He was live streaming himself betting.
You asked her
No,
a question.
I didn't, but this opens up a whole new revenue stream for me, right?
Oh man! Don't even joke about that. I mean, there was an earnings call the other night where they had
point shaving in the briefing room.
Yeah, I mean, it is kind of ridiculous the things you could place money on at this point. Forget about free throws in the NBA. Trying to get a CEO to say something in an earnings call. I forget which CEO said something maybe it was Coinbase. Somebody said something the other day and ticked off the last answer that he gave was every single word that there was a bet on him, whether or not he would say it on the earnings call. Just used a sentence and used every one of those things.
Man, they're talking a lot of just rubbish for CNBC. You think you'd have a bit better quality coverage from this? I'm just wanting to know what the latest news is with the Supreme Court on the tariff policy, where it's at.
It's insane.
I personally,
and we have reached crazy places.
Yeah, I personally think people need a new hobby. But let's talk about the Supreme Court, which is why I'm here this morning. So look, it is going to be an enormously high-stakes day at the Supreme Court today, as you guys were just saying. President Trump says he's not going to attend today's oral arguments after all, but Treasury Secretary Scott Bessent is expected to be seated in the front row today. And President Trump says he believes this is going to be one of the most important decisions ever made by the Supreme Court. Now, a very large part of the tariffs that the president has enacted this year are on the line in this decision. The Trump administration is asking the Supreme Court, where, remember, Trump has appointed 3 of 9 members, to reverse a ruling from a lower court that found that most of the tariffs are an illegal use of the International Economic Emergency Powers Act. Trump has used that law to impose what he called his fentanyl tariffs, his Liberation Day tariffs earlier this year. An estimated $90 billion in tariff revenue hangs on the high court's ruling here. Treasury has said,
okay, $195 billion in tariff revenue. That's actually a fair bit, but when the government's spending $7 trillion a year, they're definitely going to have to get a lot more revenue than that. And we're also going to pay for it with high prices.
It most likely would have to send that money back this year if the Trump administration is to lose this case. Now remember, the Constitution gives the power to impose tariffs and taxes to Congress. No president before Trump has used this 1977 law to put tariffs in place, but the law does allow a president to, quote, regulate imports of property owned by a foreign country or foreign national. Now, the White House says that's enough to allow these tariffs, but the businesses that are suing the administration argue that the power to regulate is not the same as the power to tax, and therefore the tariffs should be struck down. We'll see what the court has to say about all this at about 10 a.m. this morning. And by the way, guys, the companies that are suing the administration here, not the big global conglomerates that you might expect. The 2 initial cases were brought by smaller firms, including 2 toy manufacturers.
All right, so what do you guys think about this? Is Kiwi Bob says we need to go back to separating investment banking and banks that have regular deposit accounts. Yeah, that's exactly right. You know, people shouldn't have their life savings tied to a bank that's doing massive speculative investments. So there's still, you know, it's just pretty much speculation here in this report. I think we'll go to our next story here. And that is China makes a big leap forward as a US dollar and sanction avoidance. Because we're seeing this more and more with the US being able to use the dollar as a weapon. We're seeing more and more sanctions on these other countries that don't go in line with what the US wants. And, you know, when they were the big superpower of the world, other countries had no choice. But now the US is slowly losing power and dominance over the world economy, and countries are now going around the dollar. So let's dive in this report here to see exactly what's happening. So Intelligence has a great article today on US overusing sanctions as a financial threat. So I'll go ahead and highlight here so it's a bit easier to read along. So China's cross-border interbank payment system is not nearly as mature as a global clearing and settlement system used by the West, but it is growing fast and it is maturing. This week we read that the China Development Bank agreed to loan $290 million to South Africa, channeled through CIPS, the first intra-BRICS loan agreement. So that's huge. You know, we've been talking about BRICS for years on the channel now, and it's, you know, just been early agreements, early developments, but nothing really major happened. There haven't been any, you know, huge deals, but this is one of the first major deals that China has done to get around the dollar. This is in the denominated renminbi. There'll be a lot of firsts going forward, and the overall size of CIPS compared to Western payment systems is small, but the infrastructure is now there, and it gives China and its trading partners a route to diversify away from the dollar-denominated flows. And another layer of this system is BRICS Pay, a blockchain-based technology that connects CIPS and other domestic payment systems of BRICS countries. Now, CIPS also has its communication layer, which makes it dependent on the SWIFT, the international bank community system dominated by the West. So it's still very early days, but we're seeing, you know, we still have to see the trend here. It's not going to go from all of a sudden, you know, the US to being the dominant superpower with world reserve currency status to China overnight. We have to look for the early signs of the trend changing and the powers either loosening or losing power like the US, and China increasing global influence. The dollar is the single biggest global chokehold enjoyed by the US. The fact that all dollar transactions are at one point go through the US gives the US government the ability to impose secondary sanctions on foreign companies and banks. It also gives them huge amounts of ability to print money like other countries do without having hyperinflation. But once the US does lose world reserve currency status, that's when we're going to see real hyperinflation. So we're observing this in many areas. When countries apply their chokeholds, the rest of the world innovates around this and diversifies away from it. Alternative payment systems exist only because the US has made excessive use of its financial powers. When the foreign policy community in the US discovered the potential of a dollar as a coercion tool, they did not factor in the potential of the tool depletes the more frequently it is used. When the Biden administration used its chokehold on high-performance semiconductors by banning their sale to China, they also misjudged China's ability to develop their own. And guys, I don't know if you've watched some documentaries or some videos on how advanced China is getting. It is absolutely blasting past the US. Now, I'm not saying it's good because everything's controlled digitally. They have their digital yuan, they have their digital IDs, they have their social credit scores. But technology-wise, you know, you can go to China in Shenzhen, get a taxi with no driver. You can get a drone to order you food. Their robotics are far more advanced, and this is because they're, just focusing on what's going to make their country the most powerful in the world, when, the US is debating on social issues and gender issues and stuff that's not really that important. And, the US cannot become complacent, otherwise China will continue to fly past them. Now, we expect the same to happen also with China exercising its chokehold over rare earths. While it will not be easy for the rest of the world to make itself independent on magnets that are essential for electric engines, it is not possible to reduce one's reliance on China as Japan did in 2010, when China first applied its rare earth chokehold by banning their sales to Japan after an incident near disputed islands in the East China Sea. So this is the first major deal China and BRICS are doing to get around the dollar, and definitely the US is not going to like this. But this is a broader trend I'm seeing here of China becoming much more technologically advanced. Yes, the US is still a superpower at the moment, but it cannot just become complacent, like I was saying before. So what do you guys think about this? I'll go ahead and read some chats here before we get into our next story. So, all right, here, you're taking your money out of the credit union a bit at a time. You're burying it in the, are you burying it in the backyard? Yeah, Mary. Yeah, well, it is wise to, you don't want to have your life savings at your home, but we've seen many cases over the past few years where the banks, there's been some technical glitch. People haven't been able to buy things or pay for things unless they've had cash. Alrighty, I think we'll get into one last story, which is absolutely massive. What just happened in the US? The US household debt just hit a new record, and it's getting absolutely crazy. And we're seeing massive defaults in this one consumer debt right now. So look at this. US household debt hits record 18.6 trillion as student loan defaults explode. So I'll go ahead and bring up this chart here, and I'll have a drink of water. Just rest my voice while you guys have. All right, let's dive deeper into this report on why US household debt is hitting records and why student loan defaults are exploding. So the New York Fed published its quarterly report on household debt and credit. Surprisingly, exactly no one. The report showed the total household debt increased by 197 billion, 1% in Q3 2025 to a new record high of 18.59 trillion, split between 13.5 trillion in housing debt and 5.1 trillion in non-housing debt. So this is absolutely crazy. And I'll get to your question at the end of this story, Ricky. You just drop it in the chat again when I finish. So here are some of the details. So mortgage balances grew by 137 billion in the third quarter. Mortgage delinquency rates rose to 0.8%, 0.83% from 0.82% the prior quarter. Credit card balances rose by 24 billion from the previous quarter and stood at 1.23 trillion. And delinquencies rates are at 12.4%. Look at this. This is the highest since 2011. And this is absolutely a scary trend that we have to continue to watch. And a lot of these, regional banks, they've got huge amounts of credit card debt on their books. If this continues to spike, we're going to see more losses for the banks. I did the video yesterday on auto loans. A lot of auto loans, people are becoming delinquent on there. There's a lot of fraud happening in the auto loan sector. Home equity line of credit rose by 11 billion, and student loan balances rose by 15 billion to 1.65 trillion. So while this is true, let's see what happens to the US housing market once the evolution starts, tipped off by a scramble to sell everything in the mecca of capitalism, New York City, which is now controlled, this is according to them, their opinion, a communist. So yes, this is definitely going to affect the real estate market in New York, but it'll take a while for us to get that data. Now we can see here, percentage of balance 90 days plus delinquent by loan type. And look at this red line here. This is student loans. We can see it dropped here massively in 2023, but we just saw a huge spike. We're also seeing a massive spike in credit card debt. We're seeing a rise to close to all-time highs in auto loans as well. So this is very, very alarming, people, and something we have to continue to watch. So it says here, the most remarkable observation, over 20% of all student debt by those of age 50 or over is effectively in default. That's crazy, everyone. 20% of student loan debt by those age 50 or over in default. But if millions haven't made even a token effort to repay it in 90 days, one can safely classify it as a default. So that is absolutely insane, everyone. So what do you guys think of all these stories? I think that pretty much covers all the major stories I want to cover, but let's have some time to chat about the markets and the economy in a chat together. That's why I love doing these live streams as well, so we can have this opportunity to talk together. What do you guys think about what's happening in the markets right now? Is there any major stories that I haven't covered that you would like me to cover, or any questions you have? Just let us know in the chat below. So TKS says credit card debt goes last. Forget car repair, it's credit repair now. That's right. If you got a huge car loan and it's a brand new car you bought and you're struggling, you should probably sell that and try to pay off some of your debt and just get a reliable second-hand car. Ricky, in your opinion, what is the best way to ride out the full US collapse? Gold, silver, certain stocks, or something else? He's brought 5 LBs of silver. That's awesome. Good job, Ricky. Yes. Gold and silver is a non-correlated asset. Gold more than silver. Silver is more speculative than gold. If we do see either, there's two options here, and I talk about this continually because a lot of people get confused. They say, well, the stock market's up. The stock market's at all-time highs. Well, yes, that's because it's priced in dollars, which are losing a lot of its purchasing power. So we may not see the S&P 500 fall in dollar terms, but if the US government keeps on printing crazy amounts of money, if it does lose world reserve currency status, or we have some kind of black swan event, we all know they're going to pick the easier option, print money. Well, then your purchasing power is going to be lost massively, and gold is a hedge against that. Same, people speculate in Bitcoin as well. That's much more speculative, only a small part of my portfolio. Also, defensive stocks like groceries, utilities, they tend to do better during market corrections. But now with everything in index funds, they all tend to go down at the same time. But it's really the Magnificent Seven, which I've been talking about, the big AI tech stocks. They're the ones that are severely overvalued. A lot of the S&P 500, 80% of stocks are actually falling. What do I think of XRP? I haven't done enough research on XRP to give a good opinion. A lot of people don't like it because it is creating more centralization for banks. But again, I'd have to do some more research before I gave you a good answer. So Gary, we have to speed it up. He's going to the next race from Flemington coming up soon. Yeah, that's the way to protect yourself against the financial collapse. Go do the horses. Tina says, in her opinion, gold is good for a store of wealth. Silver is more for purchasing power. Skills are very important if you live in a community, know some neighbors, good food. Yes, that's another good thing as well. You want to have a way to grow your own food if you can. Not everyone has that privilege, but you want to have some food storage in case of emergency, in case of some kind of natural disaster event. There's been many cases when people have just completely panicked. They run to the grocery store, or in Australia we call it the supermarket, and they just buy out everything. So you definitely don't want to be those people panicking when a disaster hits. So having coffee with common sense, how long do we have until $40 trillion of debt surpasses GDP? I think it means GDP of what taxpayers can afford to pay. Well, it's already past that. There's no way the US government can afford to repay it. They're in a deficit of about $2 trillion. I think the revenue they bring in is around $5 trillion, and they're spending around $2 trillion. So what they're trying to do is they're trying to grow the economy and devalue the dollar, and that's the only way they can repay. They're not trying to repay it off to get it to zero. They're just simply trying to grow the economy faster, devalue the debt, create inflation, so that way your income goes up and it seems good. Hey, my pay is going up, but then you go into the next tax bracket and you end up paying more tax. So that's really the play they're trying to do. There's absolutely no mathematical way they can repay it back. Besides, if they just doubled the amount of dollars in existence, well, then that 35 or $40 trillion of debt is now all of a sudden worth almost half of what it used to be. Mary says, Trump bringing in digital ID September 2026. I definitely hope they're not doing that. Yes. So yeah, I don't put my trust in any politician, not Trump, not anybody. I put my trust in us, the people. We're the ones that make the real change, not the politician. A politician coming in saying, look, we're going to make this so great, your life's going to change. It's not going to happen, people. You have to take it. You have to take initiative and do it on your own. I wish there was an easy answer to say, look, just vote for this person. They'll give you UBI $1,000 a month and everything will be great. No, that's not going to happen, because whenever they print money, give out free money, it devalues the money. Let's see here. What else? We're in trouble then? Yes, that's exactly right. He's watching from Mars. Okay, shout out to Mars. Probably up there with Elon Musk, I guess. Trust no one. It's the government versus the people. Oh, I guess YouTube must have redacted that. That wasn't me that redacted that. Place your faith in the one who saves Jesus Christ, Messiah of Nazareth. Yes, you definitely have to have your faith during these hard times. TGS, he's calling his AI therapist to deal with the big, beautiful bill. That's right. Just ask ChatGPT. Why are you asking me? You guys should ask ChatGPT. That's who's got all the answers, right? That's very, very funny. But yes, that's what I recommend people. Stop waiting for a politician to come in there to save the day. Get involved in your community. Become your own bank. Pay off bad debt besides your home loan. If inflation's going up faster than your home loan and it's over 30 years, it's up to you whether you want to pay that off, or if you want to do the government play where they just let the debt become devalued. But you definitely want to pay off, credit card debt, auto loan debt, you call it in America, Australia, we call it a car loan, personal loans. Pay that off. Get an emergency fund. And again, do all this before you even start investing. Because what a lot of people get wrong is they start investing first before paying off debt. Then their investments fall. Then they panic because they have no emergency fund. They have all this debt, and then they have to sell their assets at a loss. Where if you've paid off your debt, you've got a 3 to 6 month emergency fund. If your assets go down, well, you're chilling. You don't have any issues. You don't have any worries. You can just ride it out. And something else I'm also going to say is you're definitely going to have to create some kind of business. Now, it's harder than ever, but it's also easier than ever. It's harder than ever because a lot of the big corporations, they're becoming monopolies. They're taking so much control over the markets. You can't compete with them. But it's also getting easier, as in you can create businesses online on the internet that cost no money at all. It just simply takes your time. And I know what you may be thinking, well, look, it's so risky creating a business. There is less risky ways to do it. Don't do like all those gurus on YouTube say, well, go and quit your job, just go all in, create a business. That's definitely dumb. Keep your job, and on the side, figure out what kind of skill, what kind of asset you have that you can create the business and grow it slowly on the side while you have your job until that business income replaces your job. Okay? And what used to be true before, where parents or you watching this, some of my older viewers that may be watching this, where you could go to university, get a degree, get a good job, work in that job for 30 to 40 years and retire on good benefits. Those jobs are gone. We're seeing all the amounts of layoffs. We're seeing AI taking a lot of jobs. We're seeing automation. If AI doesn't take your job, they'll offshore your job. Jobs aren't safe anymore. Jobs is actually the riskiest move. A business is the safest move long-term, in my opinion. And then you're in control. You don't have to go to a boss and say, please, can I have a pay rise of 5%? You just work harder and you get paid more. You don't have to go to your boss and beg for a vacation. You go when you want to go. It gives you a lot of freedom, and that's definitely what they don't want you to have. So I'll go ahead and read some of your chats here. Okay. You paid everything with cash, great. Well, Spy, what I've also talked about when he says, you know, markets crashing again, what I've talked about, if they keep printing money, the markets won't crash. We'll actually have the opposite. We'll have a market melt up. But that comes at the cost of people losing massive amounts of purchasing power. And that's where people get confused with my content. Having coffee with common sense. Who pays the politicians is the one who leads the country. And it's no longer the taxpayer, even if we double our mortgages to pay for it. That's right. Ricky Wood, very good information from you. Yep, thanks. Thanks for that super chat. Glad to help. Great work, Mike. Thank you for all you do. It's my pleasure. Yes, the reason markets keep going up to all-time highs is because the mass amounts of money printing and the devaluation of the dollar. But as we're seeing in the real economy, because the stock market is not the economy, we're seeing huge layoffs. People can't afford to buy a home. People, you know, the basic essentials like food, housing, energy is becoming a luxury for many. So in the real world, on a per capita base, on an individual base, we are having a crash. We're having a crash of a standard of living. But you won't see that in the stock market. For example, Venezuela, their economy, their GDP dropped 74%, but their stock market skyrocketed because of hyperinflation. And that was priced in their currency, of course. When you compare it against the dollar, it actually crashed 90%. But because the US has a world reserve currency status, that's why we're not seeing the big drops. I'll take a few more questions here before we drop off. If you guys want to drop some questions below. So really enjoyed this live stream. What do you guys think of this format? Doing about, you know, maybe doing a live stream once a day or every other day where it's an hour format. We can go over the news together. We can put all our brain power together because, again, I'm just a simple man. I'm no guru. I'm just someone that studies the markets all day, every day, and is obsessed about it. And we can all help each other reach our goals and all help each other prepare for the coming crises that will be happening. Hello, Kelly Fortune. Hello from Silicon Valley, California. Let's go. Welcome, welcome. Well, cheers, everyone. And now we have it. We no longer decide how by voting our government works anymore. Yeah, it's definitely getting harder and harder. That's why chips are $9. That's right. I think universal basic income will come, but again, you're not going to be living a flashy lifestyle. You're not even a flashy lifestyle. You're not even going to live a good lifestyle, or you're going to be struggling even if they bring in UBI, because all the businesses will just increase their prices. What do you think about the current SOFR? I actually did a video on that already. I think it was not the video I posted yesterday, the day before Eagle Cash. Yeah, it's definitely very alarming what's happening with the repo market and the SOFR rate. Do I believe Putin will send troops to Venezuela to help Maduro? I don't think he will, but I have to do more research on that. I don't want to answer off the top of my head. But I saw an article today, you know, Trump is apparently even thinking of seizing some oil fields in Venezuela. So we all know that the US loves sending freedom and democracy to countries, especially when they need oil. In the chip war, what's going on between the United States and China? Who do you think will give up first? Well, that's the $1 million question. And the real one that will win is that who continues to have control of Taiwan. China definitely wants it because Taiwan's creating all these chips. The US still has control of it. They're a military ally. So we'll have to wait and see if China actually does act with force. Not a guru, very giving man, wisdom and truth. Thanks for that. Debt equity. Like you were prepared with news clips and live stream would make it flow better. Yes, yeah, I always try to prepare, not just come here and wing it. So that way I don't waste you guys' time. What are your thoughts on Australia's economic relations with the US, EU, current economic trajectory in relation in events in the US? Well, if the US goes down, Australia will definitely go down with it. And Australia has been very dumb. They've gone all in on the housing market to create wealth and GDP and on mining. Australia's economic complexity is actually worse than many African nations, and it's very, very dumb. You know, for example, just for me, if I want to move house, I have to pay the government $50,000 just in stamp duty and tax just to move house. It's so dumb, but the government likes that because then they get revenue. Especially when, you know, states like Victoria are going bankrupt, and that's why they have the highest amount of stamp duty. And for example, all people's money is going on housing, so then they don't have money to spend out there in the real economy. So housing is sucking more and more of the economic pie, and people can't go out there and spend on real businesses that create real value. Australia's not doing good at all. The only reason Australia's not in a recession is because of mass immigration, unprecedented immigration. Ricky, thank you for your live stream. If you have a set time of these, yeah, I'm trying to figure out what works the best for my schedule, especially since having a long break. So I'll try experiment it, so that way people know what time to tune in. But this time works pretty well. All right, guys. Well, it has been great chatting with you. I think I'll end it there. Thanks for all that have joined the live stream. You're awesome. I'll see you all in the next video.